Welcome to On Target, your go-to podcast to lead, love, and live as Central Region unapologetically serves all mankind. Here's your host, Kiahna W. Davis, Central Regional Director for Alpha Kappa Alpha Sorority Incorporated.
Well, welcome back to another episode of On Target, the official podcast of Central Region of Alpha Kappa Alpha Sorority Incorporated. And I'm your host, Kiahna W. Davis, the Central Regional Director. Today, we are diving into a topic that's on everyone's mind: your money, your markets, and your future. With the stock market swings, the economic uncertainty, and shifting political policies, many of us, we are really looking at our 401ks, our retirement plans, and our portfolios with a lot of concern. But to help us understand what's happening and what we can do about it, I am joined by a financial advisor who specializes in tailoring strategies for long-term financial success. He is a chartered retirement planning counselor with Edward Jones. So please welcome Aaron Ezell. How are you this day?
I'm doing well, Kiahna. Thank you so much for having me. I'm happy to be here.
Well, thank you. So before we go, I do have to make this disclaimer. I want to remind our podcast audience that the opinions, advice, insights shared during this discussion are those of our guests and should not be considered professional advice unless you contact him directly and you want to hire him as your planner. And so this discussion involves a level of risk, and it is important to conduct your own research or consult your own financial advisor before making any investment decisions. And so, Aaron, I wanted to bring you on. You were referred to us by a sorority sister of ours, and I am so glad you are here. So just tell us a little bit about yourself. How did you get into the business, especially as a Black man in the financial world? I think our audience will want to know, what made you choose this path?
Sure. So I think that's a great question, Kiahna. I guess I'll start with the concept that I said I never work in finance. I said I certainly under no circumstances become a financial advisor, right? You know, as growing up in my family, I heard enough horror stories and bad experiences around investments and insurance and how those things just didn't work. So, if I could be anything, why would I want to be that guy? So again, I came into college with that idea, but I mentored a guy whose dad was a retiree of Edward Jones. And, he suggested that I apply. It's a great firm, great reputation, et cetera, et cetera. And I looked into it and it actually worked out. So my career started here at headquarters where I am today. And I worked here for about a year before deciding to become an advisor. And it really started, that fire inside of me started with my immediate circle. Right. I was looking at my family, I was looking at my friends, and they were not getting the advice that they needed to make good decisions for their future. And, I could have stayed here at headquarters and, made a living and done well, but I just felt like it would have been at the cost of everybody in my circle. So I did some praying, I did some soul searching, and after my first year at home office, decided to become a financial advisor. So that was 2011. Right. And I've learned to never say never, and I go where I'm called. So that's the story.
I love it. And so I love what you said about your circle, right? Because I do think a lot of times in our communities, we absolutely need financial advice. And sometimes I think we are missing market, right? People don't pay attention to us a lot, but I do think there is wealth in our community. And sometimes we just need a little bit of guidance. So I really like that you started with your circle, but I'm going to get right to it, Aaron. And, one of the questions I have, I have a mom who I say I'm her caretaker, but we'll put that in quotes. She's retired and we sit and talk about this, and she's always concerned, like all of us, about what's going on in the market today. Many of us might think that it's volatile just because of the political environment, but what's going on from your view? Many of our listeners are watching their 401ks, their other investments, and they are concerned. So from your perspective, what is going on?
Sure. So I think at the heart of it all is uncertainty, right? That's the key word. The market doesn't like uncertainty. And, we're certainly in a space where things can change rapidly. As we rounded out the end of the year and walking into 2025, I mean, we expected more volatility with the new administration. And the market certainly has not disappointed. So, I think we're having more conversations around uncertainty and really what that means for clients' portfolios and really for their financial goals.
So, speaking of kind of what this geopolitical environment we are in and the transition of presidential administrations, what has been have you seen anything particularly that has or anything particular that has impacted the markets? People always talk about tariffs, right? And I don't know. I know enough about tariffs to know that at the end of the day, the consumer pays. But this idea of tariffs, and I hear this, well, the tariffs made the eggs go up, or the tariffs are causing this. And I do know that there is a bend to this concept of tariffs of this administration, but has that had any effect on the volatility or people's portfolios?
Well, absolutely. I mean, just the talk of tariffs, right? And what that might mean for the road ahead, not only for businesses, but for consumers and for the global economy, right? Because everything's connected at this point. So if costs are going to go up, I mean, you said it, right? Some of that cost is going to be passed on to the consumer. The question is how much of that cost is going to be absorbed by companies as well, right? So, when folks own stocks, when you own a company and you're a business owner, you can relate to this, so when revenues or profits are shrinking, that's not a good thing for a company. And the stock market is full of organizations, right, that could potentially see shrinking profits. And that uncertainty alone is enough to drive the stock market downward.
So, people don't like uncertainty either, including the market. So what are the top maybe 1, 2, 3 things that we really should be looking for or worried about in this climate? Because I remember when putting your money into safe vehicles. Maybe I'm not going to say what my age is, but long time ago, decades ago, put into a money market or some CDs and some things like that. But now, in order to prepare, I'm Generation X. That means, I was born in the 70s. And so what that means is some of us are scared that we won't have Social Security. The only thing we can rely on is a 401k or any other personal investments we've made in the market. But with the market being unstable at this time, and many of us are really knocking on retirement or at least thinking about retirement, what should we be worried about?
Well, I think the number one thing is just focusing on the things that you can control, right? So what is your vision for retirement? What do you want to do? And what does that look like? Having a very robust plan and vision for your retirement, and be specific, right? So I think, the plan is very important, but also especially in moments of volatility, it is how much risk are you taking? And is that appropriate? We get a lot of people who set it and forget it within their 401ks, within their investment accounts. And, as life changes, as you go through those different stages and you start to approach that big transition of retirement, right, we have to scale down that risk. We have to at least consider scaling down that risk. So having the appropriate level of risk coupled with having a good, solid plan, are really the two things that investors should be focused on today.
But how do we protect ourselves, right? No one wants to lose money after you put in $1. You don't want to get back 90 cents, right? And I know that there are risk in an investment into a market, but I was taught, and of course I was a finance major, but I was taught that on average the market produces back then a 7% return over, you keep it in, you don't worry about it because the market tends to go up and down and kind of corrects itself, but at the end of the day you can expect a level return. I don't know if I feel that comfortable in this environment with that story.
Well, it's an average, right? So, we expect a reasonable rate of return over time. But there's going to be times when the market is down, where we're going to be down 20, 25%, 35%, right? But again, the averages are going to be something that we hope to be, above the rate of inflation and, net us a real rate of return. But we got to deal with the ups and downs. That's the risk.
That is
right?
But if I'm a person who, many people have not even started to invest.
Yeah.
And to be in this environment, how do you tell that story as a wealth manager, right? To say, you know what, now is the time to start thinking about that investment when everything is what I call cuckoo for Cocoa Puffs right now. Like what does that story look like?
Well, I mean, we have to think about the idea, we talked about the cost of waiting, right? So if you don't save now and get that compounding rolling, right? Time is your friend until you don't have enough time, right? So if you don't have time, then we need more capital, right? And bigger capital has got to work for you. But if you've got time and you can deal with the ups and downs of the market, you got to get started as soon as you can, and the hardest step is the first step. So it doesn't necessarily, you don't have to bet the farm, you don't have to put your life savings in, but just get started, right? And take it one step at a time. And, it's interesting. We've had a lot of volatility again this year, but, when the tariff conversation got really big and the market declined, we didn't get a lot of calls from our clients. The calls that we got, because we've been through enough of these markets, the call is, Aaron, is now the time. It's now the time for me to put more money in because we want to buy while it's down. If we just think about it and say, if we're going to the grocery store and bananas, right? Bananas are on sale. They're 20% off. I might not even like bananas, right? But I'll think about getting bananas, or maybe I get a little bit more than what I need because things are cheap. This is a market. It's an exchange, and somebody's going to give you something at a value because it's too high for them to hold right now. And if you can just hold it and give the market time, I mean, history has proven that, the market will rebound and the market will do well. So, I mean, it's difficult, but we got to pull the emotions back and look at things with just an objective point of view.
No, that's good. And I love the bananas analogy because what I'm hearing is in the market, there is kind of this, there's this rope and depending on what side of the rope you're at a particular time on the spectrum, right, is whether it's good to buy, to sell, to hold, and those things. And that's why we have people like you to help us navigate through those times. So tell me just a little bit about Edward Jones, if you can share about the company and some of the things that you all specialize in to help people like us get through these times.
Sure. So Edward Jones is a company that's over 100 years old, based in the United States and Canada. We are a company that believes, in putting our clients first, right? And putting their needs first, right? We do a lot in the community, an incredible amount of service in the communities in which we serve. Over 20,000 financial advisors, right? So, it's not hard to find someone typically wherever you may be, but, we set up branches right in the communities, and we are involved in those communities in which we serve. The firm started primarily by going door to door and just talking to people and building relationships. Some of that's been a little bit different since the pandemic, right? We've had some challenges there, knocking on doors and talking to people, but that's how we started. And that is still, I believe, the spirit of Edward Jones is really, really diving into client needs and serving clients well. So if I'm going to say anything about the firm, that's pretty much what I'd say.
Well, awesome. So a lot of advisors out there because we span across 8 states in the Midwest. And I'm sure in each of those states, with that many advisors out there, somebody can find someone in their state, their city, their neighborhood, et cetera, with Edward Jones. So going into some more very tactical things. We talked about the uncertainty and things like that, but what can people do right now at this moment to prepare themselves? And this whole segment is about money matters. What are some of the top things that we can do now with our money?
So, Kiahna, I guess if I wanted to start, things are in a little bit of, there's a state of chaos that's happening right now within the markets and with investors, right? So I think it starts with organization, and this is, we're now diving into value proposition and really how we help service clients, get organized, right? So let's start to identify where things are and how they're positioned, and let's get rid of the clutter. Right. So, if you go into your garage and you clean things up, I mean, how much of a sense of calm do we have once we get things organized and things look good? Right. So we're going to start with the idea of organization. I think we have to get back again to the goal and to the plan. Right. What is important to each and every person? And part of my job is just to hold people accountable. You said that you wanted to go travel the world 3 times a year. You said you wanted this cabin in Colorado, or you wanted a house on the beach, and if that is still important to you, we have to work through these storms and navigate these storms so that we can get you there. Right. So, we pull the emotions out of things, again, we see those statements come down. We see our values come down on our statements. That can be a difficult thing to swallow. But I think a good part of that is just setting expectations from the beginning, that things are going to go up, they're going to go down, we're going to have some tough times, we're going to have some really good times. And at the end of the road, we're going to see you accomplish the goal that you set out to accomplish. So again, we've done I would say a pretty good job of setting that expectations with clients. So, when the volatility comes, they understand that this is an absolute opportunity. The emotions are out of it. It's like, my statement's down. That means things are cheap. Maybe we should get some money out of money market, because a lot of consumers have cash on the sidelines. We should be really, really thinking hard about getting in for a portion of those dollars. And that, what that looks like is going to be different for everybody.
Okay. And so you talked about people having cash. I think about at least how I was raised, that you always have stashes of cash everywhere, right? I think me and my sister laugh about that to say, my nephew, my daughter is always like, hey, it doesn't seem like you're never broke. And I'm like, well, it just means that there's a stash of something somewhere. I might have even forgotten where I stashed it. But the advice of taking that cash and using this moment as an opportunity to understand what that investment could look like. Because for those who don't know about investing at this moment, is this a moment where we're saying that many of the stocks out there are down and at value? They're valued right now. They're value priced, and you might consider looking at, instead of this being a time where we're fearful, is a time of investment, because there could be some value in the market at this time, especially if you have some extra cash somewhere.
Absolutely. Right. So, there's some value now. It's not quite as good as it was, we go back to April, but there's still some value, I believe, in the market. But, if we talk about, clients or, investors being fearful, right? It comes back to risk, but there is a risk when you do nothing. Keeping money in cash is a risk, right? Because, and I'm going to dive into the numbers a little bit, if that's okay.
Absolutely.
But, we start talking about inflation, right? Rising prices. At this point, after, the last couple of years, everybody knows what inflation is, right? So
right.
Prices increase on average around 3% a year, right? So what that means is that prices are going to double every 24 years, right? So if we've got money sitting in cash growing at, let's just say 1%, right? If you're earning 1% on cash, it's going to take you 72 years for that money to double.
Yep.
But everything that you use that money to buy is doubling at triple the speed.
Yeah.
Right. So there's risk with keeping money in cash. A lot of folks don't understand it, but there's risk in, putting the money in the market. So then we start to get into the idea that we want to diversify, right? So cash is good for some things. The market's good for another portion of your overall assets, and then we start getting into, things that pay interest outside of cash. But I don't want to go too far down that rabbit hole, Kiahna, but I think you have to know where you're taking risk and what that looks like so that you're not surprised when the market behaves like it has in 2025.
Well, I do think that, especially in our community, right, where we are sometimes we want to feel things, cash, cash. There might be this idea of the value of cash because of inflation, right? The dollar today is not worth the dollar tomorrow. But there's something cultural about us holding on to cash, looking at our bank account and saying, hey, I have $100,000 there today, and it's going to be $100,000 there tomorrow. And that is a peace of mind. How do you create a peace of mind, especially when I think culturally who we are as African Americans, particularly? How do you create that as a person who advises people on wealth management to say, hey, you know what, you might want to take that cash that you can feel, you could touch, you could see in a statement, it's not going to change much, right? Because unless the whole government goes down, it's insured with FDIC. So what does that story look like for a community that really sometimes don't trust financial institutions and the people around it?
I could not agree with that, what you just said, right? There has historically been a lack of trust. I mean, I grew up in that environment, right? So I think first we have to clearly identify, what is this money for? Right? We got a number, and we use 100K, right? If you've got 100K sitting at the bank, what's the purpose of this money? So if it is rainy day money, well, what does a rainy day look like? If we're worried about job loss, right? Or the economy or anything like that, well, how much income replacement do you need? Is that 3 months, 6 months, 12 months? And, when we talk to clients, I mean, that can vary widely depending on your comfort level with risk. But what is that number, right? So we're going to drill down into that number. We're going to say, let's say it's 50K, right? Okay, great. Then maybe we keep 50K in cash and we start thinking about that other 50K in ways that we can, again, outpace inflation and get a real rate of return on those dollars. And then we work through the details on what that looks like. Now, when we talk about trust and building trust is built in transparency. So I'm a teacher, I'm a counselor, right? I feel like I should have a couch in my office, and I should charge by the hour, right? For some of the therapy that I provide. But the fact is that we want to demystify what we do in our office. We want to make it really clear what we're doing for clients and how we're adding value. And a big part of that is just teaching, because I didn't grow up, my family didn't talk about money growing up. Don't ask me about mine, I won't ask you about yours, and everybody will be good. But the fact is that I had to learn as an adult, and I teach it to adults every day. So when folks come in, it's not, give me the money and I'll make it work. It's no, here's how we're going to work in partnership to see this done. And here's why I have this recommendation for you. Here's the road that we took to get there. Does that make sense? And if so, is there any reason we wouldn't want to get this done? Right. Yeah. So transparency, Kiahna, is the key.
I love that, because I do think that many of us, regardless of how many degrees and how educated we are, there is this tug of war with financial institutions, with our community, and it is about trust. We have not been treated well historically, and so even when we find ourselves with some assets and in a net positive position. We are looking for people who we can trust, who tell us with all transparency, the good, the bad, the ugly, but also really dig deep, because it's a different conversation with us. It just is. And I tell people, as you know, I'm in business too, in the financial space. And it is a hard conversation if you're not, you don't have a level of cultural competency to speak our language and understand the concerns, the fears, the hopes, and the joys of us in our community. And so, some of us and many of the people who are going to listen to this podcast, they really do have investments, right? Or they have the net worth to at least look into something like this, but are a little nervous, a little scared, as we talked about before at the beginning of this. But name a common mistake that people make in a market like this. Like, what is that one thing that you just like, why did you do that? What is that thing so that no one out there will do it?
I mean, I think the first thing that comes to mind for me, Kiahna, is getting out of the market, right? Going to cash. And, I've been around long enough that in some moments of volatility, historically, we've seen some clients go to cash. But again, more recently this year, of the 350 households that we serve, we had 2 clients go to cash, right? And I think that's a win for us. We feel really good about that. And we advise that clients didn't go to cash. But I think that's a major mistake that we make, because once the account goes down and then we get out, we don't participate in the rebound and the uplifting of the market, right? So, for me, I think it comes down to education and understanding cycles of the market. The market's going to go down sometimes. We'll see a 20% decline in the market historically once every 3 years.
Yeah.
It's a normal part of the market, right? So, and typically after that 20% decline, we see the market rebound and go up, and, we see historical highs, places we've never seen before. And, everybody's happy, but sometimes you got to go through the difficult times to enjoy the good times.
Awesome. Before I leave with the last question, I want to ask you this. You mentioned that your organization does a lot in the community, and Alpha Kappa Alpha is a service organization. And so can you talk about some of the things that you guys have done in the community, because that service and service to all mankind is really at the heart of who we are?
Sure. So, at the firm level, I know that we raise a lot of money for United Way. We do things like the Alzheimer's walks and things like that. At a smaller, more regional level here in St. Louis, we just recently, a few weeks ago, went to a local organization, Beyond Housing, right? And, a nonprofit where we went in and we did things as small as like hang blinds. But we also had some people out digging up pipes, and trying to really help them get some pro bono work, and some sweat, and putting some sweat equity into that organization. So that just recently happened, middle of May. So, we've done that. Me personally, I am giving back to my university. I'm serving on the finance committee. I'm bringing my experience to the table and really giving in the most meaningful way that I think I can. So I'm a member of the finance committee for our alumni association. I serve on the finance committee for a local nonprofit, Unleashing Potential. And for me personally, I found that is the best way for me to give and the most valuable way for me to give.
And it creates authenticity with you and the community too, when you're able to operate in that space. Well, the last question I have for you for the day with this talk of Money Matters is any last financial advice you can leave our listeners about navigating their financial futures?
I would say, and maybe, I'm biased, right? But I think sitting down with someone to help you build a very structured plan makes sense, right? Having a financial coach, right, to hold you accountable and count the reps out as you press the bar, and track your time on the treadmill, and hold your feet to the fire for the things that you said are important. I mean, the value that's there for me, I mean, it's very hard to measure, but it's a great value that's being added. So, I'll back away from that. There are moments of uncertainty. The market to me is one big soap opera. Day to day, there's always something going on, and some people are going to view that as an opportunity. Some people are going to view that as a risk, and there's going to be an exchange that happens. You have to decide what end of the table do you want to be on, right? Do you want to be taking advantage of what the world and, politics and economics and all those things are presenting, or do you want to be on the sidelines, right? And that there's a delicate balance there, right? Of, again, how much risk do we want to take? How much do we want to preserve and protect? And again, that just brings me right back to the value of working with a trusted professional to help you get there.
Well, thank you, Aaron, for your wonderful advice. We thank you for your insight, especially to the members of Alpha Kappa Alpha Sorority Incorporated. And I am sure that there will be some people who might want a little bit more information. So tell us how to get in contact with you if some people have some questions and want to potentially become a client.
Sure. So I am happy to serve. Right. We have clients all over the country, and I can be reached by, I'll say phone. So 314-997-4905 is my branch phone number, but I can also be reached by email. And that's aaron.ezell@edwardjones.com. So Kiahna, if I could say one or two other things, again, I just want to say thank you for having me and thank you for the time. I am, of course, happy to serve. So if there's anything that I can do for you or your organization, I am going to be happy to show up. And I do want to say thank you to that client that made that connection, that soror that made that connection, and made this whole time together possible. So thank you both.
Thank you. Thank you. And so we will name that client. Thank you to Daphne Dorsey there in the St. Louis area who made the connection. And we were trying to do this at the seat of our 91st Central Regional Conference in St. Louis, and the weather and the timing just didn't work out. But we are so grateful that we are in a space where we could have Aaron come and share with us these valuable tidbits. So thank you, Aaron, for helping us demystify the market and reminding us that with the right information, the right guidance, we can make informed decisions even in times that seem very much uncertain. And to our listeners, thank you for turning in to On Target, the official podcast of Central Region of Alpha Kappa Alpha Sorority Incorporated. And if you found this episode helpful, we be sure to subscribe and share it with a friend. You can catch up on any past podcasts and follow us at AKA Central on all social media platforms. We are also on Apple iPod and all the iPod streaming services out there. Don't get me started. It's too many out there to name. But until next time, stay informed, stay empowered, and always stay on target.